Hello, very good morning to all, and welcome to a brand new week ahead and a brand new month of March. Very good morning. Today's daily dose will officially kickstart back at 11 a.m. Singapore time. So, very good morning to all. I'm Kelvin here. I hope that you guys have a restful weekend. Welcome to today's daily dose. Today will be Monday, the 3rd of March 2025. So, before we kickstart our daily dose for today, let's have a quick look at the disclaimer first. All right. Leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product, as well as any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. All right, so as usual, let's have a quick recap what has taken shape on Friday in terms of the news flow, economic data release, as well as the intraday performance of the cross asset classes on Friday, and as well as any important data that to take note on over the weekend as well. So let me start with the performance of the major US stock indices on last Friday. All right, so as you all know that on last Friday, the markets actually rallied. The Dow Jones, the Nasdaq 100, the Russell 2000, as well as the SPX, all four of them rallied, and the rally came exactly at the middle, the second half of the US session. So still recall that for those who followed my daily dose on a frequent basis on Friday, the short-term intraday technical, I do highlight that the Nasdaq 100, was the weakest major US stock indices last week due to the lackluster performance of the US semiconductor and also dragged down by exposed NVIDIA weak share price performance after their earnings announcement. However, most of them, the Nasdaq 100 has hit a extreme oversold level with 5 wave down in terms of elliott wave. I'll flashback again for those who miss it, and the rally actually took shape exactly at the inflection level of the 5 wave down, which is very close to the mathematical indicator of the Nasdaq 100 200-day moving average. So the price has really rallied as expected and also hit our short-term resistance level. So the next key step to ask us right now on the intraday basis, what are the key levels to watch out for? So later I'll touch on more about that thereafter. So also the rally on this movement of the major US stock indices on last Friday also come with a slowdown in the movement of the dollar strength as well. So if you look at the dollar strength on last Friday over here, right, it was rather sideways. So it moved sideways, right, we could see. So the sideways movement of that dollar on last Friday also act or what you call it, a support that tactical short-term intraday bounce on the major US stock indices. And what's interesting over here as we are speaking, during the Asia session, the dollar strength also right now has starts to give a bit of a movement on the downside as well. So the reason why the dollar right now is actually moving on a weaker tone as we are speaking, that means dollar strength do a bit of Asia session sell off as we are speaking, is due to this news flow over here, is that Nikkei Asia, which is one of the prominent English language newspaper in Japan, this morning make an announcement, kind of do a bit of what you call it, news flow that is caused the dollar yen to actually weaken in today's Asia session. That's why drag the dollar strength in today's Asia session down as well. Why? Because Bassett over here, which is the current US Secretary of Treasury, or we call it that the indirect finance minister, kind of the finance minister of US, or in proper terms is the Treasury Secretary of US, signal that Washington could probe interest rate repression by other nations. So that actually indirectly targeted Japan, stating that by right, Japan should potentially be more aggressive in hiking rates. So over here, if Japan becomes the target of US probes for possible reciprocal tariffs, and the White House conclude that the yen weakness is linked to the Bank of Japan monetary policy, the central bank would face pressure from Washington to move faster as it waits additional interest rate hikes. So i.e., what indirectly Bessette means, the Treasury Secretary, means that Bank of Japan is rather slow in normalizing its monetary policy. That means they should be engaging in a much more faster pace of interest rate hike in Japan as to be conducted by BOJ, which is Bank of Japan. So that actually causes the dollar yen to actually slip down in today's Asia session and dragging the rest of the dollar strength as well against other major currency like the dollar, the dollar against the Kiwi, the dollar against the CAD, and as well as the dollar against the euro and the dollar against the sterling. All right, so that has taken shape over the this morning Asia session, which is an important particular news flow, and this particular news flow also coincided with that spike up on the dollar yen at the 151 short-term pivotal resistance, which we highlighted on last Friday, where we have a bearish bias once the dollar yen hit that level, and that level hit exactly upon the release of this news flow. So you see the very strange concurrent about short-term pivotal resistance level or pivotal support level coinciding with respected news flow. Okay, so once this happened, we got to respect the price action react to such reinforcement of this pivotal technical support level, which I highlighted on my short-term intraday basis. All right, so another news flow on the highlight is happened on late last Friday was this fall off of US President Trump and Ukraine President Zelensky. So on Friday, there was supposed to actually ink out a mineral resource deal from Ukraine, where US were kind of guaranteed a kind of a safety guarantee to Ukraine to actually push ahead with this peace deal between Ukraine and Russia to actually stop this ongoing third year of Ukraine-Russia war. But unfortunately, you guys, this is being made out in the open out in the open on late last Friday, Singapore time, that's AM, 4 a.m. or 5 a.m. There was this very unglamorous, we call it a fighting match between US President Trump and Vice President Vance over Ukraine President Zelensky. All right, so unfortunately, there was no mineral deals that's being signed by US and Ukraine, and potentially could postpone that so-called brokered Ukraine-Russia peace deal as being supported by US. So with that, that also saw oil prices rallied, and the oil prices also rallied right exactly at our short-term pivotal support level. All right, over here, that's this rally over here at 69.50, bounce out from here. So later I'll share you what's to look out for West Texas crude oil. All right, so and also over the weekend there's this news flow out from China. Okay, the MBS manufacturing PMI actually came in better than expected. So previously it was at contractionary territory, so market is looking at 49.9, so it inched up much better to 50.2, and the services PMI also went up slightly higher. So this they call it the non-manufacturing PMI. From 50, market is expecting at 50.3, it goes up to 50.4. All right, but later I'll share with you. Yes, this particular positive note of this manufacturing PMI from China for the month of February allows the Hang Seng indices to jump by 1.19% and the Hang Seng Tech Index to jump. So the way they jump also hit our first support level that we highlighted on Friday as well. So after that, the price actually went down. We have a bearish bias, hit the first support level, and it jumped up in today's Asia session. But however, there is still some technical weakness in the short-term intraday basis on the Hang Seng Index. Later I'm going to cover, and potentially there could be a bit more of a residual down move for the Hang Seng Index before another leg of bullish up leg takes place. And this bullish up leg takes place could be supported by one key event that should be taking shape in China this week, which is the China 2 session. Later I'll highlight towards the end of today's daily dose. Okay, so do be patient with me for a while because I got to cover it step by step instead of jumping here and there on the daily dose. All right, so these are the key news flow and event that take shape on last Friday. Yeah, one more thing on the highlight on last Friday is very important about the core PC data from US. So the core PC data from US came in within expectations, so no big surprises. So market is looking at 2.6% year-on-year increase for core PC price index for the month of January. So that came in within market expectation. All right, 2.6% as well. So that also prevent the US dollar from strength from spiking up. All right, so that also kind of indirectly support that major US stock indices tactical corrective bounce on last Friday. All right, so that actually covers the news flow, data release, and as well as its influence on the respective broad-based cross asset classes, which I covered just a few minutes ago. So with that, now let us now jump straight into the short-term intraday technical outlook that I want to cover for you guys for today and the key levels to watch. All right, so as usual, let me expand my screen. All right, good. I think the screen is good right now. Okay, let us start with the FX market first with the euro dollar. All right, so the euro dollar, if we call last Friday, we do have a bearish bias looking for the dollar strength. So the dollar strength plays out as expected, hit the 50-day moving average, and upon hitting the 50-day moving average, it dips slightly lower during the middle part of the US session before trading sideways. And in today's Asia session, there's this gap up over here. So what you could see over here is that on last Friday US session low, the hourly RSI has shaped a bullish divergence. And upon shaping this bullish divergence, what we could see is that the euro dollar also shaped a 5-wave down, a small 5-wave down, 1, 2, 3, 4, 5, with a 0.382 fifth wave target at the low of last Friday. Okay, okay, you see the 0.382 over here. Okay, 0.382. Okay, 1 point, which is the coincide with the low of 1.0360. So what I could see over at my screen here, let me put it up in writing so that you guys could have a better visualization. So this is considered as a minor wave 1, minor wave 2. Oops. Here we are. Wave 2, a 3, and this is a 4. And right now, this is a 5 on last Friday. And this wave 5 coincide with the 0.382 fifth wave target. Thereafter, bullish divergence formed on the RSI. So indicating that the 5-wave down move starting from the high of 27th of February, 1, 2, 3, 4, 5, more or less has run its course. And we know that in terms of technical analysis, based on the Elliott wave perspective, price action don't go linear, it's oscillate. So that means right now there is a potential oscillation on the upside to retrace some portion of the 5-wave move down, 1, 2, 3, 4, 5. So if you look at Elliott wave perspective, after 5-wave down, minimum 38%, maximum 61.8%, 76.4%. So graphically, what we could see over here is that the RSI step by step hasn't hit the overbought level yet. Okay, it hasn't hit the overbought level. That means, i.e., this gap up during today's Asia session could potentially have some more room to run as we head into the European session. So I'll be using firstly the gap support over here as my first support to watch. So there could be some signs of at least a minor pullback to cover a bit of this gap up during the European session opens, which is at 1.0890. All right, 1.0, okay, sorry, 1.0390 over here, 1.0390, but I do not want to use 1.0390 as my short-term pivotal support because of a potential whipsaw. So the shorter pivotal support should be at this tipping point where we shape that potential minor V-shaped recovery on last Friday at 1.0360. Right, so as long as any dip during the European session didn't surpass below 1.0360, we will flip to a intraday bullish bias for today on the euro dollar to potentially shape this minor bounce scenario to retrace the prior 5-wave down in terms of the Elliott wave perspective. Two key resistance level to watch on the intraday basis for today after that potential dip down first in the first step, 1.0440 followed by 1.0460. So why is these two levels important? Graphically over here, minor swing low area of former minor swing low area of 25th of February and 27th of February, where this level broke, managed to see a very steep downward move, okay, to shape that wave 3, wave 4, and that wave 5. All right, so this is something like a prior sentiment trigger level. Support broke, shape that steep downward move down, now turns into a key sentiment pullback resistance level. And if you do the Fibo retracement of that 5-wave down, the start of the 5-wave down towards the end of the 5-wave down, that coincides with the golden ratio of 61.8%. All right, so these are the two key resistance level to watch for this potential minor bounce take shape. So to me, we know that this is only a minor bounce, so there could be still risk of the euro dollar to shape further downside going forward tomorrow or early towards the US session, because now I'm trying to play out because there's another 12 more hours to go for the US session. 1.030, 1.29D could still be the risk of further downside, and that one over here also coincide with the lower limit of this ongoing ascending triangle-like range configuration that is still taking shape since the low of 13th of January. Right, it's still in the process of evolving. We're in this kind of ascending triangle range-like configuration. So net overall, I'll be using 1.0360 short-term pivotal support level, flip to a intraday bullish bias for a potential intraday minor mean reversion rebound to play out to retrace that prior 5-wave down move based on the immediate wave perspective. Two intraday resistance level to watch for today, 1.0440 followed by 1.0460. But however, if price action just plunges down and broke below 1.0360, today's intraday bullish bias will be invalidated to see it floating downwards towards the lower limit of this ascending triangle range like formation that is still playing out. Next near-term support level to watch, 1.0330 followed by 1.0290. All right, so that's for the euro dollar. Onward next will be the cousin, the sterling dollar. So the sterling dollar also came down with a 5-wave down move structure, 1, 2, 3, 4, 5. And the 5th wave target actually corresponded very closely to our support level, which is the 20-day moving average that we highlighted on Friday as well, where we do have a bearish bias on the sterling dollar. So that also coincides with the 0.382, right? 0.382. So I'll be using 1.2550 short-term pivotal support level, which is correspond to the rising 20-day moving average. We will flip to a intraday bullish bias for today on the sterling dollar as well to retrace some portion of that prior 5-wave down move. 1, 2, 3, 4, 5. And the first resistance level to watch for today will be 1.2640 / 1.2650. All right, so over here, 2650. Okay, so if I do the Fibo retracement of that 5-wave down move, okay, that coincide with the 50% and the 61.8%. Maximum 1.2685. If 1.2650 is surpassed on upside, that correspond to the 76.4% and the minor swing high area of 27th of February. Okay, so however, if price action just plunges downwards and break below the 1.2550 level, if I hourly close below it, today's intraday bullish bias for that minor rebound scenario to retrace that prior 5-wave down will be invalidated to see the continuation of the down move, exposing the next support level at 1.2470, which also coincide with the 50-day moving average acting as a support level. Graphically, the minor swing low of 13th of February and as well as the lower limit of this ongoing bearish ascending wedge like range formation that is still taking shape from the low of 13th of January. Right, so i.e. Using 1.2550 level as my short-term pivotal support on the sterling dollar, we will flip to an intraday bullish bias to see a potential minor corrective bounce scenario to retrace certain portion of that prior 5-wave move down. All right, so that's for the sterling dollar. Onwards next will be the Asia Pacific currency against the dollar, which is the Aussie dollar. So the Aussie dollar also starts to trace this 5-wave down move, 1, 2, 3, 4, 5. But this 5-wave down move is much more extensive on the downside, like I explained on Friday why the Aussie dollar got hit the most because of the commodities currency related play to Canada dollar, where the US administration now is planning to hit Canada with a 25% tariff tomorrow, right, 4th of March, because the cooling period is over, and right now Trump may potentially threaten to hit the 25% tariff on Canada unless Canada accedes to Trump's request. From now, that is the reason. But in terms of price action on the Aussie dollar, we know that there's a 5-wave move down, and also the RSI starts to shape that bullish divergence as well. All right, so from there, there could be a chance of a minor mean reversion corrective rebound taking shape for today, potentially to retrace certain portion of this 5-wave down, i.e. potentially the 50-day moving average and the 20-day moving average acting as a similar resistance as 62.60. Above it, see 63 figure level. So I'll be using this support, short-term pivotal support zone over here, which was last Friday's support level, which has been met, 6190/6175. Short-term pivotal support level will flip to a intraday bullish bias for a potential minor mean reversion corrective rebound scenario to take shape for today to retrace certain portion of that 5-wave down move on the Aussie dollar. First near-term resistance level to watch, 62.60, which is correspond to the 50-day moving average. Above it, see 63 figure level. So if we do the Fibo retracement of that entire move down, okay, that 63 figure level confluence with the 50% Fibo retracement. Okay, however, if price action starts to have an hourly close and a breakdown below 61.75, today's intraday bullish bias were invalidated to see the continuation of that impulsive down move, exposing the next near-term support level at 61.40, followed by 60.90, which is the minor swing low area of 3rd of February. Okay, so that's for the Aussie dollar using 61.90/61.75, flip to a short-term pivotal support zone to flip to a intraday bullish bias for a potential minor mean reversion corrective rebound to potentially unfold to retrace the steep downward movement of a 5-wave down from 21st of February high all the way down to last Friday US session low. Okay, so that's for the Aussie dollar. Lastly will be the dollar yen. So the dollar yen over here, still recall last Friday we have this pivotal resistance level where we potentially see the bounce could actually start. So the bounce indeed start over here on last Friday, or in fact tested on last Friday and tested in today's early Asia session as well, 150.70, 150.95, which is close to 151 figure level. So still no change using this 150.95 short-term pivotal resistance level. We will flip to a, we will still maintain that intraday bearish bias on this dollar yen over here. So first support level to watch on the dollar yen over here will be this level. Okay, okay, at 149.40, 149.40. Below it exposes 148.80/70. All right, so these are the two key intraday short-term support level to watch. Let me put it in writing, 149.40. Okay, this one over here, let me push it up. Okay, good. Okay, so I repeat, 150.95 short-term pivotal resistance level, maintain the intraday bearish bias on the dollar yen. Two intraday support level to watch out for, 149.40. Below it exposes 148.80/70. However, if price action reverse up and have an hourly close above 150.95, today's intraday bearish bias will be invalidated to see the continuation of this ongoing corrective rebound to extend. Next near-term resistance level to watch will be the 20-day moving average, corresponding to it the next near-term graphical resistance at 15165. Above it says 15220, which is also the 200-day moving average, and as well as the upper limit of this ongoing medium-term descending channel from the high of 10th of January. Right, so that's for the dollar yen, still maintaining the intraday bearish bias using 150.95 as my short-term pivotal resistance level. Okay, Onwards next will be the major stock indices short-term intraday technical outlook. All right, so starting with the Hong Kong 33. So the Hong Kong 33 last Friday, it came down, hit our first support level before bouncing out in today's Asia session. So if you look at today's Asia session, yes, it rallied, but it starts to form a hourly bullish candlestick formation. All right, we see a spinning top here, and taking into this three candle lights pattern, 1, 2, 3. This is a bearish evening star. Okay, gap up, strong bullish candlestick. Second candlestick can't maintain the momentum, and right now is shaping a bearish Marubozu candlestick as we are speaking right now. All right, because yes, 30 more minutes to end before the hourly candle end. So this I will call it is not a confirmed bearish evening star candlestick. Taking into this account of three candlestick formation, I would say it's an impending one, but we know that on the upside here, it seems to us the bulls get exhausted on the intraday basis. So with that, I will use a Titan key short-term pivotal resistance level, and this exhaustion candlestick also form exactly at the pullback resistance of this former minor ascending channel support from the low of 3rd of February. So using a Titan short-term pivotal resistance for today on the Hong Kong 33, or representing the Hang Seng Index at 23,430, we'll still maintain that intraday bearish bias. First support level to watch 22,900/760 again to be revisited. A breakdown below it exposes 22,470. Right, so there's still a bit of residual corrective down move to complete on the Hong Kong 33 before before any form of potential impulsive up move sequence may materialize based on a Elliott wave perspective. All right, so however, if price action starts to have an hourly close and break out above 23,430, today's intraday bearish bias will be invalidated on the Hong Kong 33 to see a squeeze up to revisit 23,830, follow and above it potentially sees 24,190/24,510 level. All right, so that's for the Hong Kong 33. Right, so onwards next will be still maintaining that intraday bearish bias for a residual movement down to complete this corrective down move sequence within its medium term uptrend phase, using 23,430 as my Titan short term pivotal resistance level. Right, what's up next for the Japan 225? So the Japan 225 also came down, and before shaping that corrective bounce again, what you could see over here. So this corrective bounce at this time of the Asia session also formed a bearish candlestick over here, spinning top followed by a very strong, very bearish Marubozu like candlestick. And right now, the price action of the candle seems to be getting smaller in terms of the body over here. So with that, this is my first resistance level to watch based on the exhaustion shooting star intraday high. We also correspond to the former minor swing low of 25th of February and 26th of February, pullback resistance at 37,800. Slightly above it, there will be this minor descending trend line taken from the high of 18th of February, got rejected on the 27th of February, got rejected on the 27th of February over here as well. Before that, a steep down move takes shape right over here. So that resistance level is at 38,130. So I don't want to put it so tight at 37,800 just in case of the whipsaw. So using a slightly higher pivotal resistance for today on the Japan 225 representing the Nikkei 225, 38,130 as my short-term pivotal resistance level. Still maintain that intraday bearish bias, but first support level to watch will be last Friday US session low at 37,120. Only a breakdown below 37,120 potentially exposes the next near-term support level at 36,750. All right. However, if the price action starts to stage a bullish breakout above 38,130, today's intraday bearish bias will be invalidated to see a potential squeeze up towards 38,490, followed by 38,880/39,010 if 38,490 is surpassed to the upside. So this 38,880/39,010 is confluence with the 50-day moving average, I think, as a resistance level close to it as well. Right, so that's for the Japan 225. Okay, next up will be the German 30, represent the German DAX. So the German 30 and the German DAX, a bit of whipsaw, one whipsaw over here. So last Friday, it managed to survive at the 20-day moving average. And what we could see right now, that it seems to us that from the all-time high all the way to the current price action, it seems to be trapped in this minor symmetrical triangle range configuration, as depicted by this dotted gray line on the upside and the dotted gray line on the downside over here. Right, so there's a descending trend line and then there's an ascending trend line, and this ascending trend line is being supported by the 20-day moving average, acting as a similar support level at 22,270 that got survived on last Friday. So with that over here, price action gap up in today's Asia session, and now coming very close to the upper limit of this potential minor symmetrical triangle range resistance upper limit, which is at 22,730. All right, so I'll be using 22,730 as my short-term pivotal support resistance level, pardon me. I repeat again, 22,730, which is the upper limit of this ongoing symmetrical triangle range configuration. Price action in today's Asia session is coming very close to it. So I'll be using 22,730 short-term pivotal resistance level. Bearish bias within this sideway minor symmetrical triangle range configuration. First support level to watch will be 22,440. A breakdown below 22,440 exposes the lower limit of this symmetrical triangle range configuration, or the symmetrical triangle range support, also confluence with the 20-day moving average, acting as a similar support at 22,270. Only a bullish breakout above 22,730 will invalidate today's intraday bearish bias to see a start of another impulsive up move, revisiting the current all-time high area in first step at 22,930 slash 23,050. Okay, so that's for the German 30. Right. Onwards next will be the major US stock indices, starting with the US Wall Street 30. So the US Wall Street 30 squeeze up as expected, hit our first resistance level. All right, and thereafter it just traded sideways during the start of the Asia session. So what we could see over here is that it could continues to churn again in a sideways like fashion over here. So with that, no strong conviction to play the bounce again further above 43,850. So for today, I will flip to a neutrality stance. So neutral between 43,840 and 43,120 slash 42,980. So it could just churn within this neutrality zone unless we have an hourly close and a breakout above 43,840, then I could validate a further bullish bias on the intraday basis on the US Wall Street 30 to revisit the 20-day moving average, acting as the next near-term resistance level at 44,180. All right, so flip to a neutrality stance for now, neutral between 43,840 and 43,120 slash 42,980 next. Okay, so that's for the US Wall Street 30. Now onwards next will be the Nasdaq 100. So the Nasdaq 100 rallied and almost hit our first resistance level at 21,030. Okay, hit the resistance level 21,030. So what you could see on the Nasdaq 100 over here is that we know that this 1, 2, 3, 4, 5, 5 wave down, and what we could see now could be the A wave have completed, and now there could be a B wave taking shape on the Nasdaq 100 over here. So what I could see over here is that potentially this is a small A, and now there could be a little B wave that is taking shape. Let me put it in the turquoise color. Okay, a B wave, then thereafter a potential C wave to retrace it. All right, over here. So I could see from an Elliott wave perspective, right? If we do the Fibo retracement of that 5 wave down from the current all-time high area here, okay, on Tuesday, all the way down to the low of Friday, the 50% is at 21.330. All right, so the level that hit on last Friday is neither here nor there. Okay, it's in between 23 and 38.2% Fibo retracement. So I could see over here that means this push up on last Friday could be only the first leg of this corrective rebound phase. That means only the A leg has completed, and there will be a B leg Then thereafter there will be another up leg of the C leg. So this C leg is likely will be the last residual push up of this corrective rebound. We're also very close to the 50-day moving average, acting as a resistance level as well. So for today, on the intraday basis, they could start to see a bit of churning that could take shape for the B leg. So I would not want to be so aggressive to play that bearish down move because it could be a B leg and it may not even hit the low of last Friday. All right, over here. So I will have a neutrality stance for today. So neutral between 21,030 and 20,716 for today. So flipping to a neutrality stance on the Nasdaq 100, unless we start to see a very fast movement. That means it hit the B leg and suddenly there was a swift upward movement with an hourly close above 21,030. Then potentially that C leg may form during the US session and hit the next resistance level at 21,330 next. So with that, I will turn neutral for now between 21,030 and 20,716 on the Nasdaq 100. All right, so that also sum up the intraday technical outlook on the major stock indices. So let us now focus our attention to the commodities market, starting with gold XAU/USD over here. So for gold XAU/USD, last Friday it hit exactly at our support level at 28.45. Okay, hit 28.45. So I could see upon hitting 28.45 over here, the hourly RSI managed to hit the oversold level and did a swift push up. And this swift push up on the hourly RSI also broke that former descending trendline resistance. So indicating some form of intraday bullish momentum coming back into gold XAU/USD. And what I could see, gold XAU/USD also trace a 5-wave down. 1, 2, 3, 4, 5. Okay, so let me put it in writing. So this is a wave 1. Okay, so this is a wave 2. This is a wave 3, a 4, and this is a 5. Okay, and with the bullish breakout of this former minor parallel descending trend line, indicating some form of intraday bullish momentum coming back into gold XAU/USD, that could be an intraday minor bounce to retrace certain portion of this 5-wave down. That means, i.e., ABC move before another leg down, because in terms of Elliott wave, after every 5-wave, and we've put some form of positive momentum is being seen on the corresponding short-term momentum indicator using RSI, to justify whether there could be a chance of a retracement after a Elliott wave 5-wave down. So there could be a chance right now potentially because of that bullish breakout of that former minor parallel descending trendline support, indicating some form of a short-term intraday bullish momentum creeping back into gold XAU/USD. So using so right now gold is trying to cover the gap. You can see over here there's this minor gap up and with a bullish hammer candlestick that's being formed right now as we are speaking. So I don't want to use the first support level 28.58 as my pivotal support because we tight. I'll be using the pivotal support zone of 28.45/83.40, which is the last Friday minor swing low area as my short-term pivotal support level. Flip to a intraday bullish bias for today, only for a potential minor corrective rebound phase to take shape rather than the start of a bullish reversal formation to retrace certain portion of the 5-wave down. That means, i.e., after this bounce finish, there could be still chance of another 5-wave down to complete this entire medium-term corrective wave structure. Potentially that could end at the 50-day moving average at 2790/771. So this 2790/771 could potentially be the tipping point to kickstart another round of impulsive up move to see it to continue it to its recent current all-time high level. So right now, this potential bounce may not see the current all-time high level reach it and even beyond because it's still within a longer-term corrective wave structure according to the Elliott wave perspective. All right. So today's intraday resistance level to watch in first step will be the 20-day moving average, acting as a similar resistance zone of the former ascending trend line support from the 31st of December now turns into a pullback resistance at this correspond to the 20-day moving average as well at this zone here of 2893/905. And if you do the Fibo retracement of that 5 wave down from the current all-time high, it corresponds to the 50% and the 61.8 Fibo retracement, 61.8% Fibo golden ratio Fibo retracement. All right, above 2905 potentially sees the extension of that minor corrective rebound scenario, revisiting 2923, which is a very clear congestion area here from the wave 1, rejected from the high of wave 4, and before it collapsed down to complete that wave 5. Okay, that corresponds to 76.4% Fibo retracement right over here. So put everything in a nutshell, 2845/2834 short-term pivotal support for gold XAU/USD based on the Elliott wave perspective. 5 wave has been completed on the downside. Right now, we are seeing a potential ABC move to retrace certain portion of the 5 wave down. That means, i.e., there could be a chance of a minor mean reversion corrective rebound segment taking shape for today. First resistance zone to watch, 2893/905 above 2905 potentially sees an extension of this minor corrective rebound to revisit 2923. Only a sudden push down and the hourly close below 2834 will invalidate today's intraday corrective rebound sequence to see the extension of this ongoing corrective decline wave, exposing 2810 level. Below it sees the 50-day moving average coming in at 2790/2771. Okay, so that's for gold XAU/USD. Lastly will be the West Texas crude oil. So let's look at the daily chart of the West Texas crude oil first. So you look at the daily chart of the West Texas crude oil right now is attempting to form a shooting star formation. And on last Friday, okay, there was something like a hanging man as well. All right, on last Friday, bearish hanging man. So with this bearish hanging man that's take shape on last Friday, and given that on last Friday, we do have a bullish bias over here. So this bullish bias is coming very close to the resistance level that we highlighted on last Friday. So yes, there could be a bit of potential bounce that could take shape on today. So I'll be using any bounce to fade the strength on West Texas crude oil, and we'll flip to a intraday bearish bias for today. And so given that it also corresponds very closely to the downward 20-day moving average. So I'll be using this level here as my short-term pivotal resistance zone to fade any potential strength as long as it come close to it. Okay, let me put it in writing. Okay. So this will be the pivotal resistance zone on West Texas crude oil. Okay, so hopefully it starts to show. Yep, good. Short-term pivot. Okay, and this for sure will be my first support level to watch that got survived on last Friday where the bounce take shape. So only below 69.50 potentially revisit last Thursday minus swing low of 68.80. All right. However, if price action starts to bounce very and surpass above 71.70 instead of coming downwards, then this minor extension corrective rebound may extend towards the 50-day moving average, I think, as the next resistance level, and also correspond to the minor swing high area of 19th of February and 21st of February over here. Okay, at 73.27. 73.27. Oops, why is it not picking up? Maybe just give it a couple of seconds, so hopefully I can write the text down. It's still not sure, what is going on. Okay, good. 73.27. Okay, I repeat, because of that hanging man that has formed on the daily chart, and as well as right now showing a very impending daily shooting star. The day hasn't ended yet, but because of last Friday shooting hanging man, formation very close to the 20-day moving average. So I'll be using any chance of any bounce to fade that strength using 71.35/70 short-term pivotal resistance, which will correspond to the downward sloping 20-day moving average. So only left a bit of residual move to go up to this resistance level. So I do not want to be bullish, so bullish today. So instead I will use any potential bounce and flip to an intraday bearish bias as long as 71.70 is not surpassed to the upside. First near-term support level to watch will be last Friday rebound level at 69.50, followed by a breakdown below it. Only a breakdown below 69.50 may expose last Thursday minus swing low at 68.80. All right, so that's also sum up the intraday technical outlook on the broad-based cross asset classes. So before we go, let's have a quick look at the economic calendar. What are the data to look out for today over here? Okay, so for today, Monday, right? Okay, so Monday in the European session, you will have the Eurozone aggregate inflation rate flash data for the month of February. So this is the preliminary inflation number. People will be looking at the core inflation. Market is expecting a slight dip to 2.6%. Anything that is way below it, that could actually potentially influence the euro dollar to the downside. But if you start to see a higher level than 2.6%, potentially the euro dollar might spike up. All right, so and that could actually create a dollar weakness as well across the board. Then thereafter, that will be at 6 p.m. Singapore time. All right, and thereafter you will have the all-important ISM manufacturing PMI data that could influence the major US stock indices and the major US dollar pair. That will be out at 11 p.m. Singapore time. And most importantly, market will paying close attention to the sub-component. We call it the ISM manufacturing prices. So this is considered as businesses within the manufacturing sector cost of input or cost of doing business in the manufacturing sector of US. So previously, according to expand upwards at 50, market is now expecting a high number of 56.2. So any number beyond that could potentially see a bit of weakness on the major US stock indices. Why? Because a high number represents cost of business inputs for the manufacturing sector is facing inflationary risk, and that could prevent the Fed to be more dovish this year. And we also may start to see a bit of whipsaw in the major dollar pair as well. Okay, so that will be at 11 p.m. Singapore time. And I want to highlight this week there will be the China 2 session over here. So this 2 session is it's a China preliminary annual session. So market will be it will kickstart tomorrow, Tuesday on the 3rd, but market will focus mainly on Wednesday instead, right? Wednesday, why? Because on Wednesday, Premier Li Keqiang will make an announcement on what will be China growth target for this year and how will China achieve that by giving some inflation target, budget deficit target, and market could potentially infer whether that so-called aggressive stimulus policy may be announced in the coming weeks ahead after the 2 session has ended. Because if China announces a very aggressive, deeper budget deficit of more than 3% or more, that means there could be much more fiscal stimulus coming into play. And also the tonality of the press conference after Wednesday and Wednesday session, and actually it's a week long. It's a week long parliamentary session, but the key focus will be on Wednesday, not tomorrow. Tomorrow the thing will kickstart, but we know that yes, tomorrow kickstart, there could be still press conference that go on every day. So local press conference may hint a bit of so-called ongoing fiscal stimulus or change of tonality by the China top leadership that could even take shape at the end of Hong Kong session tomorrow. But usually this week-long meeting will start early in the morning and end around Hong Kong stock market closing time. And during Hong Kong stock market closing time, tomorrow there will be some press conference that is taking shape because things are not official yet. But usually market will focus on Wednesday instead, because this is where the day where Premier Li Keqiang will announce China growth target for this year, how to achieve it, and as well as concluded with the end of the day press conference. So the key focus is still on Wednesday. All right. So with that, that ends up today's Daily Dose of Market Insight. I wish you all a great day ahead, and we shall speak again tomorrow. Thank you very much.